Let's meet ourselves.
Hey guys, welcome. We will just wait for a little bit until more people come in, and then we'll start. We'll start at maybe 11:03. We'll see. Hi guys, welcome. We're still just waiting for people to come in, so we'll probably start in 2 to 3 minutes. Hey guys, thank you for coming in. We will start just in a little bit before until we have more people coming in. But right now I'm seeing that some people have already asked questions through the chat. So for the Q&A session, what we'll do is you can ask questions with the Q&A function on Zoom. I believe it's located at the bottom of your Zoom window. It's just a little function called Q&A, and you can ask questions through there. And then after the first portion of the webinar is done, I will sort through these questions and we'll use those questions for Q&A. So the chat window is strictly for if you have any technical difficulties, or if I were to send our Twitter information or other information related to the webinar. All right, guys. So we now have close to 200 attendees. So we'll get this started. 1 second. So thank you so much for joining us for today's Decoding China webinar with MacroPolo. My name is Houze, and I'm a research associate at MacroPolo. And today we'll have a very quick chat about where the Chinese economy is headed after COVID-19. But before we begin, there are some housekeeping items. If you experience any technical difficulty with Zoom, please let me know in the chat or just email me at hhe@paulsoninstitute.org. My email is in the chat as well. And if in the process of the webinar, you have any questions about the topic, you can ask it through the Q&A function that's just located at the bottom of your Zoom window. And I will sort through these questions, and the second half of the event will be dedicated to a Q&A with the panelists. And after the event, for any lingering questions, we'll open a Twitter thread for half an hour, and you can ask questions on Twitter. And our Twitter handle, which I already put in the chat, is MacroPolo China. And that's macro as in macroeconomics and polo as in Marco Polo. And I've just put the Twitter handle in the chat for all to see. So this is the first of many webinars on China that we'll be hosting in the future. And if you want to attend events similar to this one, you can get on our email list for the latest updates. So I have just put our subscription link in the chat window as well. So without further ado, let me introduce today's panelists. So we're joined today by MacroPolo's director, Damien and research fellow Houze, who writes our quarterly macroeconomic outlook, and he will launch an inbox-only economic product very soon. So welcome, Damien and Houze. And I will now hand this conversation over to Damien. And remember, if you have any questions you want them to answer in the Q&A, please use the Q&A function on Zoom, and I will be collecting all these questions. Thank you.
Thank you, Holly. Good morning, good afternoon, or good evening, wherever you may be beaming in. We're here beaming in live from Chicago, obviously in quarantine, and we hope our quarantine is as interesting and as good as yours has been so far. Obviously, we are here trying to have a conversation about probably one of the biggest stories right now, which is the Chinese economic recovery. So before I get to that, I just want to quickly reiterate what Holly said, which is that we're going to have a discussion, and then we will also be having a moderate Q&A for about 15 or 20 minutes. And then if that is not enough, and if we didn't have a chance to address all your questions, we're also available for a live discussion on Twitter with Houze and me for about 20 minutes or 30 minutes, depending on interest. So there should be plenty of time for discussion. And the way we're going to proceed is that we're going to have, rather than a formal presentation, we're going to just have a conversation, and I'll be asking Houze some questions, and we'll have a back and forth. Hopefully that will be more engaging and interactive, and hopefully that will also lead to other questions that you may have as we're going through it. We'll have just a few very minimal visual aids, and we'll just put them up briefly to illustrate a point, and then we will kind of go back to a conversation. So that's how it's going to proceed. And so let's get the discussion started. Obviously, what we know right now is that, for all intents and purposes, whether you believe in the official numbers of COVID-19 cases or mortality rates or what have you, that's a separate debate. But there are a lot of signs suggesting that Chinese is going back to normal. Chinese life is going back to normal. You're seeing supply being ramped up. You're seeing people moving around a lot more. You're seeing subways in Shanghai, 75 or 80% capacity. And of course, a major sign is that the Chinese government just announced the National People's Congress for May 22nd. So there are a lot of signs that suggests that the pandemic has passed and life is starting to resume back to normal. But that does not mean the Chinese economy is out of the woods by any means, and that's what we're going to start with: is how to think about the Chinese economy in terms of the immediate term recovery in the coming quarter, second quarter, and into the third, and also thinking a little bit more about some of the medium term adjustments that may be needed coming out of this crisis. Some of this will be we will be touching on Houze's macro outlook that just came out last week or a couple weeks ago. If you haven't read it, I think Holly has sent a link in the chat function. You can digest that later or move along with us, whatever you feel like. But so let's just begin with kind of the broad question, which is many economists talk about economic recoveries with a specific letter shape. It's usually an L, a V, or a U. V being the most dramatic, swift rebound, and L being flat, and U being kind of a protracted recovery. Now, Houze, if I'm correct, I think what you're saying, what you're seeing is that rather than what was expected, which was a V recovery out of China, it looks a lot more like a U-shaped recovery. Could you kind of run through why you think that that's the case for the second quarter?
Yes. Yeah, the reason we believe that the recovery probably will go into the pace of recovery will moderate in the coming weeks and months is because we believe that there's a widespread and actually pretty acute problem that currently Chinese economy is suffering, namely the private sector cash shortage. This problem will drag down growth in the coming months because one is affects a large share of the Chinese economy. The private sector basically accounts for more than half of the overall economy. And the second is that this problem is actually right now is in pretty acute stage because the slowdown in the past 2 years have already taken a substantial toll on the private sector finance. So from this chart, which is showing the number of days that it takes for private firm to collect cash, this matter has been basically increasing substantially between 2018 and 19, and since this year it actually has increased to unprecedented levels. So, and this cash shortage problem will in turn have multiple implications. For one, it will affect demand because firms are cash short, they will tend to reduce their inventory level. And more importantly, it will also affect employment and also investment as well. So basically, because of the cash shortage, both the number of jobs and the amount of investment in the economy will continue to suffer for many months in the future.
So Houze, it sounds like what you're saying is that the private sector in China is basically, they got hit with a double whammy essentially, right?
Mm-hmm.
They, in the 2018, 2019 period, they were already facing a lot of problems. Part of that was obviously related to the trade war that was happening at the time. And now they're getting hit again as part of this COVID-19 crisis. So given that you've diagnosed a sort of demand is really the shortage, or demand shortage is really central to the extent of recovery in China. What do you think Beijing's response will be, and where are they going to find that demand?
I think demand is certainly a very, very major headwind to the economy and one of the top priorities for Beijing. But actually, it's really not the biggest challenge. Is really not really the demand as reflected in headline GDP numbers. It's really the implications of lack of demand on the job market. This is because partly because the nature of the shock China is experiencing, the pandemic, which hit the labor-intensive service sector the most. To put this into context, that China's employment in the retail and wholesale sector is about twice the total employment in construction and manufacturing. So this gives you a sense that the job challenge China is currently facing, because unlike the previous similar episode, for example, the global financial crisis, which mostly first hit the export sector, the current shock primarily hit the service sector, which has a much higher labor intensity, which means that the similar size shocks translate to a much bigger amount of job loss. So I think that in the coming months, Beijing sure will, on the one hand, try to introduce some stimulus to support demand. But more importantly, I think Beijing's #1 priority is really a job.
So in the balance between kind of bolstering growth and jobs, they're going to try to protect jobs. So I'm guessing they'll probably try to expand the social safety net a little bit and perhaps protect the most vulnerable migrant workers. But going back to the growth question, because that's obviously a concern. You've written for quite some time now that Beijing is just not in the mood to stimulate, or at least not to the extent that it used to. And similarly here, that we're not really seeing or expecting a major stimulus to come out of China. They will certainly stimulate a little bit, or as you call it, just enough stimulus. So could you kind of run through why, during this crisis and even before that, Beijing has become more prudent or more reluctant to kind of pull the trigger on stimulus?
Yes, I think the reason is largely twofold. The first is really just as I explained that the current challenge is primarily reflecting job loss rather than headline GDP numbers. So I think right now, if Beijing wants to, it's relatively easy for them to pop out the headline GDP numbers, say through like public investment. But however, we need to realize that, for example, even if that Beijing introduce another massive stimulus in the form of public investment, it will not help to create a lot of jobs. So basically that the construction boom after 2009 has cumulatively generated around like 15 million jobs. But right now, the total job loss in the Chinese economy is probably at least double the size, probably on the scale of like something like 30 million. So even if Beijing can introduce another like 2009 scale stimulus, it will be inefficient to offset the job loss problem that economy currently encounter. And second is really that also Beijing's capabilities to stimulate is also much more reduced compared to 08, 09. In 08, 09, both China's financial and fiscal situation was much more healthier than current. The result that back in 08, 09, that Beijing could really afford to introduce a really large stimulus. But the situation now that dictates both the elevated level of public debt and the vulnerabilities in the financial sector means that the Beijing's ability to introduce another large stimulus is also limited. So basically, in summarize, both that the stimulus will not be very effective this time to address the number one problem, namely employment. And second, Beijing's ability to introduce a larger stimulus is also more limited compared to previously.
Huh. Interesting. So both intent and capability, they're more than they were back about a decade ago. So let's look ahead just briefly. I mentioned earlier that the National People's Congress Day has been set for May 22nd. So in about 3 weeks, we'll have about 2,000 or 3,000 politicians descending from various parts of the country to meet in Beijing. It's obviously a time where the premier gives what I would call the State of the Union address, so to speak, and talks about what's happening in the economy. Obviously, the COVID-19 issue will figure prominently at the NPC. What do you expect any kind of policy signals or other things that may come out of that session?
Sure, yeah, because as I said, that Beijing's ability to stimulate right now is limited. In the meantime, it probably now facing unprecedented level of challenges. So right now there's a situation of a mismatch between means and ends. So under such a situation, so Beijing has to prioritize. So, and I think the coming NPC will provide us with much more clarity regarding to what will be Beijing's top priority for this year. And additionally, I think another thing to watch for in the coming NPC is the growth target. There right now has been some debate as whether Beijing will still introduce another growth target this year. So my sense is that probably more likely than not that they will still introduce a growth target.
So on that point, I just want to quickly interrupt and say we'll have a poll at the end that centers on the idea of the growth target. So look for that from Holly. We would like all of you to weigh in, but we're going to save that to the very end. But just putting that out there right now. Okay, so possibly still growth target and maybe the fiscal deficit, right? They will probably raise the fiscal deficit. What did you say? What's your anticipation of the fiscal deficit?
I think because of both the revenue loss and the loss in the land sale revenues, I think Beijing probably needs around 3% to the point of GDP deficit to just balance the budget, and which means that if they want to a little bit more room to stimulate, they will really looking at like an actual 4 percentage point or 5 percentage point GDP of deficit. So my baseline scenario is that probably on budget deficit, probably this year will increase by something around 4 percentage point of GDP.
So let's switch gears for a little bit for the last few minutes. Let's step back a little bit and think a little bit more broadly. Let's first look backwards a little bit and then look forward. Backwards, what I mean is, obviously you mentioned the global financial crisis, but when it comes to jobs and so on, there was another crisis 20 years ago, the Asian financial crisis, where that led to some structural adjustments in the Chinese economy, right? And so I wanted to just kind of see what you think in terms of how do you think Beijing is really thinking about this crisis? Are they looking at these kind of historical examples, both the global financial crisis and the Asian financial crisis? You talked a lot about jobs, private sector, but back in 20 years ago in the Asian financial crisis, a lot of the job losses were coming from the state sector. So what do you think is, how do you think Beijing is thinking broadly about this? Are they kind of just looking at a lot of historical examples?
I think they probably draw some lessons from those past two episodes you just mentioned. For example, I think the one lesson is probably that in the years immediately after the Asian financial crisis, China's economy actually in pretty bad shape. That job loss has been immense, and the growth has suffered multiple year deflation. In contrast, that actually the initial few years after the global financial crisis, Chinese economy actually, judged from the headline numbers, actually in pretty good state. But afterwards, basically from 2012 to 2015-16, China has been basically suffering the consequences of the initial imprudent stimulus. So I guess probably one of the takeaways, actually we have actually seen this also reflected in the writings and speeches in some of the senior officials like Governor Yi Gang and the Vice Premier Liu He. It's really that the headline numbers is probably not as important as say like other indicators, say like productivities. So one interesting thing is that actually Governor Yi Gang, back in the early 2000s, he already wrote in a paper paper on China's growth slowdown in the late 90s. And one of the key takeaways from his paper is really that the headline number matters not as important as productivity. So we don't know whether that Beijing will follow this, although there are really both Governor Yi Gang and Vice Premier Liu and a few other senior officials that clearly hold this view. Intention is really hard to tell. So although we can say maybe on the margins, the experience of the two episodes, maybe on the margins will make Beijing less inclined to introduce stimulus. But I think also if you just look at the constraints on Beijing, for example, the Beijing's abilities to stimulate, I think here is much more clear picture that really Beijing's capability to stimulate is now much more reduced compared to 08, 09, which means that given that the situation, given the constraints on Beijing's ability to stimulate, I think so there's probably a similarity here right now with the late 90s, another episode when Beijing's capability is kind of like insufficient to meet the challenge. And probably and as a result, we just from the last chart, we have seen that because Beijing's inability to continue to pop up those zombie SOEs in the late 90s, there have been a massive scale of SOE closed down. So my guess is that this time in the coming few years, we may see not as large, but a quite substantial consolidation in the state sector.
So it sounds like perhaps one silver lining too is that, I mean, you didn't talk about it directly, but you might be able, you're probably going to see more bankruptcies too, right? That they're going to be more tolerant of bankruptcies, both in the private sector, probably also in the private sector, just because they can't hold the line. And I think you mentioned too earlier that there's also the government concerned about a massive moral hazard problem. And so tolerating bankruptcies is potentially kind of a silver lining to kind of mitigate the moral hazard problem in the system. So, you know, we are, I think in the interest of time, we are gonna try to turn it over to all of you now with Holly. But let me just first see, I don't know if you can see the results of the poll, which is, will China abandon a specific growth target in the 14th five-year plan? 70% of you said they will not abandon it, meaning there will still be a target in the 14th five-year plan, and 30% of you said yes. So given that the 14th five-year plan will drop sometime later this year, we will see if whether the 70% are right or the 30% are right. But thank you for conducting that. But it sounds like most of you think that the growth target will remain intact. With that, I'll turn it over to Holly, who's been curating questions and collecting things from you. So Holly, take it away, and we will. And you can direct it to you know, either Houze or me or both of us, however you choose.
Great, thanks everyone. I think we now have around 30 questions, but in the interest of time, I will select 5 to 7 questions. And I will also put the selected questions in the chat so everybody can see it. So let's see. Okay, the first question we have is, given the assessment that the Chinese government might not have the policy space to support the private sector to the extent needed to bolster growth, do you see opportunities for private credit or private equity firms to help supply liquidity? And I will copy and paste this to the chat as well.
Why don't you take that? Why don't you take a first crack at that?
Sure. I think the big picture in the coming few years that is really that the state sector, in terms of their liquidity and cash position, the state sector will unquestionably be the strongest. And and beside that, probably a few like large private firms, like say like Alibaba scale firms, they'll probably have enough cash to do some acquisitions, acquire some of the cash strained forms. So, but still, by and large, I think that probably just as indicated by what happened in the past 2 years. So, probably in the coming few years, the majority of the acquisition or the liquidity support will coming from the state sector. So, but that said, I think that the size of the state sector, the potential expansion of the state sector, not necessarily translate into a stronger state sector, because one takeaway, one lesson from 08-09 is really that if you look at in the long term, the state sector expansion, especially those type like debt finance imprudent expansion, actually in the long term is actually really still should be seen as liabilities rather than asset to the state, and liabilities really in the literal sense. So I think that we will probably see some state sector expansions in the coming few years, but still I think in the long run that this expansion probably will be temporary, and I don't hold the view that probably this will mark a turn in that state sector will regains this dominance in the Chinese economy.
Great, Damien, do you have anything to add?
No, I think Houze covered it well. So question number 2.
Great. So question number 2, what is your assessment of the real unemployment rate in China right now? There was a report saying that as much as 70 million people in China lost their jobs in the first quarter. So that roughly makes the unemployment rate be about 20.5%. And this is a question directed at Houze.
Mm-hmm. Okay, yeah, I have seen that report. So I think that their ideas are probably in the right direction, but there's probably there is a very rough estimate. So my guess is that the numbers probably overestimate a little bit, but I think that still, I think the true unemployment is probably in the double digit, above 10%. So I have done some very conservative estimate of the impact of the growth slowdown in the past 2 years. And my very conservative estimate suggests that in the past 2 years, that the slowdown in the past 2 years already costs at least 5 to 6 million rural migrant jobs. So right now we are probably the true side of the rural migrant unemployment, probably more than 10 million. That's for sure.
Great. Moving on to the third question here. Do you think the impact of COVID-19 on the economy will significantly increase the risks of the corporate debt crisis?
Okay, I'll just weigh in first. Okay, I think I'm not that concerned about near-term outlook of China's financial stability, in the sense that usually the financial crisis, whether in China or other emerging countries, there is a necessary condition, which is a tightening in the US. So basically, when Fed signal that it's probably going to tightening in the future, that will usually cause both a tightening in the global financial crisis, and which will in turn will trigger some of the vulnerabilities in some of the emerging and developing economies. So, and right now, I don't think that the US Fed will tighten anytime soon. So I think so that means that for example, in the next 12 months, I think China's financial situation is probably manageable. And I don't think that an immediate financial crisis or a large-scale corporate default will happen.
So I agree with that, but can I pull the thread a little bit further? Because I think when we talk about that, China
Mm-hmm.
right now is juggling a lot of different priorities, and there's some immediate challenges, and there's some medium term, and there's longer term. So we went into this crisis with a very aggressive deleveraging campaign that's been going on for a few years. Mm-hmm. And kind of the trade-offs in thinking that, I mean, is the deleveraging agenda going to take a slightly more of a backseat right now, or do you think they're going to kind of once they get out of this, they're going to come back and maintain kind of that deleveraging emphasis?
Sure, yeah, I think the key reasons that why Beijing pursued deleveraging back in 17-18 is really not that that if the situation is not contained, that Chinese economy will enter a financial crisis in a few months or quarters. It's really that if this trend left uncontained, that in a few years, that Chinese economy will in really, really risky situation. So China's financial situation, in my opinion, there has never been a question that the crisis might happen, like let's say in the immediate term. The risk is always on the longer term horizon. So which means that both the temporary postponing of the leveraging, or maybe the current releveraging, the implication for the near term financial stability is probably minimal. That's my view.
Great. And we're getting a lot of questions on the Belt and Road Initiative. So I'm just going to synthesize them and ask them as one question here. So in general, what do you guys think, what are the ways in which the COVID-19 pandemic could affect the pace at which the Belt and Road Initiative progresses with China? and also among participating countries.
Yeah.
You want to wait?
I can try to weigh in a little bit on that. I think it's important to understand that the Belt and Road Initiative was never really, I'm just seeing some of the chats, it's never meant as a kind of a driver of growth per se, or at least not in the immediate term. It's a fairly longer term strategy, and it's an all-encompassing thing that is, it's a lot of different pieces. To me, the BRI is more of an idea than anything else. And so a lot of things can fall under the BRI, but I think whether specific projects will slow down, probably, especially given what happens with certain state firms that are being that are participating. But I think that's at the corporate level, depending on the state-owned enterprise or depending on the private firm that's involved in a particular project. But I think the broader intent and strategy behind BRI, which is to build markets and build linkages to the west of China, all the way to Europe. I'm talking about the land one, not the maritime one. I think that will continue to hold. I think China will continue to hopefully, sell into the European market, and so that particular kind of way of linkage is not going away, even if specific projects will slow down. You can call it BRI, you can call it something else, but I think the idea behind it is to create a more integrated market west of China. That strategy itself is not going to be deprioritized as a matter of strategy, even if in the immediate term certain projects get mothballed or slow down a little bit.
I just want to add one point, is that from the data, I think that China's overseas investment tend to be pro-cyclical rather than counter-cyclical, which means that during the current downturn, that China's overseas investment probably will see retrench rather than a growth.
And there may be more, there may be some more place in the energy sector given the volatility in the oil markets. And so, I think that's certainly possible, especially given, the Mideast is also part of BRI. So there's a lot of ways to look at that, but I would, I wouldn't expect BRI to kind of just be abandoned, even if things.
No, yeah.
Okay, great. And we have maybe room for 2 more questions. And as you see in the chat, if there's any questions unanswered from this webinar, after the webinar, you can go to our Twitter, where we already tweeted this thread where Houze will also be answering questions live for another 30 minutes after the webinar. So the next question is...
Holly, we're going to ask 3 questions together, and then we'll just answer questions.
Okay. So this question is, how is supply side structural reform going to change as a result of the response to COVID-19? Will this accelerate reforms or slow it down? And then on the demand side, what scope is there for transfer of assets to households from the government? And then I also have another question, I think that's more directed at Damien. What will happen with China's environmental goals after COVID-19?
Okay, Houze, why don't you start and I can weigh in and
you said 3 questions. I just heard 2 questions.
First one is supply side structural reform. Second one is on demand. What is the scope? Is there scope for transfer of assets to households?
Okay, sure. I'll address the first 2, and I'll let Damien to address the environmental question. So I think first on the supply side reform, the so-called supply side reform is really not just it's probably, I think, is especially in terms of the consequences. Is the consequence probably more in terms of like popping up industrial prices, and also to solve some of the excessive capacity issues, rather than I don't think it actually in an active way that help to turn around some of the surviving forms. Its main contribution is really just to close down some of the least efficient forms. And I just said, my guess is that this time, because the Beijing's the constraints on Beijing's financial and fiscal resources, Beijing probably has to engage another round of large-scale close down of inefficient state forms. My guess is that primarily the target will be like local level zombie SOEs, and also some of the weaker local government financial vehicles. So yeah, so in summary, the basic supply side reform is primarily contribution is really just about the close down of the inefficient forms. I don't think it has done much to turn around the surviving SOEs. And second, transfer of wealth from the government to the household. I think Beijing certainly has engaged in some modest scale transfer program. For example, last year there had been a cut in income tax, and this year Beijing is also to signal some like minor matters. But by and large, because I think for one, the key challenges now is really that it's not that the household they don't have enough income to consume. It really they don't have the enough confidence. It's really confidence rather than income that constrains household consumption. And this is probably going to last for a while. For example, I think just for example, draw on the US experience, that US, even small items like clothes and shoes, the consumption of clothes and shoes did not recover to the pre-global financial crisis level until almost 3 years later, which give you a sense of the recovery of household consumption, how long it will take. My guess is that probably in China, that we'll probably also see a similar pattern, that eventually that consumer confidence will take quarters or probably years to recover. So, and in the meantime, the key challenge that is really not consumer income rather than confidence. So my guess is that given this assessment, Beijing will devote more resources to matters that probably either indirectly or directly help consumer confidence, say helping to create or sustain jobs, which kind of like indirectly help consumer confidence to recover.
So just a quick follow-up on that. I think we were discussing that, one of the ideas that's being floated in America is the UBI, the Universal Basic Income. Has been controversial in some quarters, and some people like it, some people don't. And obviously, we had a former presidential candidate that was talking about that quite a bit. Would something like that apply to China, or does China already have something like that in terms of kind of both bolstering kind of immediate income, but also raising a little bit of consumer confidence?
Yes, I think we already seen signs. For example, Beijing is now expanding the social safety net to cover the migrant and the rural populations. And given the low level of benefits, usually less than $200 per month, actually will not cost Beijing a lot of money. That said, actually it's not only helps those disadvantaged migrant workers to cope with the temporary difficulty, actually also in terms of consumption stimulus, it can very effective in the sense that those, in general, lower income population tend to have much higher propensity to consume. Basically that because they are kind of like hand to mouth consumers. So if the government say provides like say $200 to them, the majority of the $200 probably will consume immediately rather than being saved. So yeah, it's kind of like one stone killing two birds. Both help the migrant workers, also kind of like stimulus consumption.
And on the last question is on China's environmental goals coming out of the COVID-19 pandemic. I assume it means both kind of the environmental side and climate goals. So I don't want to give too much away right now because we'll probably actually have a webinar series in the future that talks more about the environmental and the energy implications that's coming out of this crisis. So I will only say here that I think in the immediate term, as we've discussed throughout this whole webinar, the priority is focused on recovery. So there's going to probably be, heightened energy consumption and things like that. That might look like China is regressing or whatnot. But I don't think in the medium long term, China is really going to abandon its commitments on the environment or climate. I don't see many signs that they're ready to do that. Or that they will do that. Obviously, we'll get a lot more clarity on the 14th five-year plan, which again is coming up later this year. And I think if Beijing were smart, they would also look to kind of the new energy efficient environmental industries as a growth driver as part of the recovery. And I would anticipate some of that to be built into the 14th five-year plan. In fact, that was already the case going even before the crisis. So I don't see too many signs that they're going to change course after this crisis.
Great. Thank you so much. And we are ending right on time. But before you leave, I want to direct your attention to the chat window. As you can see, after the webinar, Houze will still be on Twitter for around 30 minutes answering any lingering questions that you might have. And I already posted the link to the tweet in the chat. And if you're interested in future events, or if you want to sign up for Houze's upcoming economic analysis delivered to your email, please sign up for our email list. The link I already posted in the chat as well. And then last but not least, you can also check out Houze's macroeconomic outlook for the second quarter, which we already published on our website, and the link is in the chat as well. So thank you everyone for tuning in, and we hope to see you at the future events very soon. Thank you.
Thanks. Bye-bye.